What's up? Dave here, and today we're diving deep into a stock that's been making some serious waves, Synopsys, ticker SNPS. The charts look a little hairy, but the fundamentals, oh boy, they're cooking. Is the bottom in for SNPS, or are we about to see some more downside before the real party starts? Let's find out. Alright, so the buzz around Synopsys right now is huge, and it's mostly centered on two massive catalysts. First, the NVIDIA partnership and their whopping $2 billion investment. This isn't just a handshake, it's a deep integration of NVIDIA's AI and accelerated computing with Synopsys' design tools. Think faster, more powerful simulations for everything from chips to cars. This is a game changer, pushing SNPS right into the heart of the AI revolution. Second, there's the big ANSYS acquisition, which is set to expand Synopsys' market reach into simulation, an even broader universe of engineering. But it's not all sunshine and rainbows. We're also hearing about some near-term headwinds, specifically export restrictions impacting their IP business in China and a few bumps with a major foundry customer. So you've got this incredible long-term growth story mixed with some immediate challenges. It's a real head-scratcher, which is why we're doing this deep dive. For those not familiar, Synopsys Inc. isn't just another tech company. They're the silent engine behind so much of our modern world. They provide the electronic design automation, or EDA, software that engineers use to design and test integrated circuits. Basically, the blueprints for all the chips in your phone, your car, and your computer. They're also big into intellectual property like USB and PCI Express, and even offer security testing. They're serving huge industries like electronics, automotive, and medicine. Essentially, if you're designing cutting-edge tech, you're likely using Synopsys tools. Are absolutely critical infrastructure for innovation. So, how do we reconcile this incredible potential from NVIDIA and ANSYS with these immediate headaches like China and that foundry customer? It's all about balancing those forces, which leads us directly into our scenario analysis. We've got three main paths Synopsys could take, each with its own probability. First up, our base case, which I'm giving a 45% probability. This scenario assumes that Synopsys successfully integrates ANSYS, gets solid contributions from the NVIDIA partnership over time, and these big strategic moves gradually offset those current IP business headwinds. We're looking at a moderated EPS growth of 8% for the next year, slightly below their historical averages to account for those near-term challenges. With a target PE ratio of 32x, which is a bit of a discount to their current PE, this gives us a fair value per share of $441.28. This feels like the most probable outcome because the fundamentals are strong but tempered by those immediate issues, suggesting a period of consolidation, which actually aligns with what we're seeing on the charts. Next, let's talk about the bull case, which I'm assigning a 20% probability. This is where everything goes right. The NVIDIA partnership kicks into overdrive, delivering faster than anticipated growth in AI-enhanced solutions. The ANSYS acquisition is incredibly synergistic, opening up new revenue streams quickly. Plus, those geopolitical tensions ease and the foundry customer issues get resolved fast. In this scenario, we're projecting an accelerated EPS growth of 12% and a premium PE ratio of 38x, reflecting that accelerated growth and strategic validation. That puts our fair value per share at a juicy $543.40. Now, why only 20% probability? Because right now, the chart needs to break above a key resistance level of $455 to really signal a strong uptrend, and we're not quite there yet. The technicals suggest this outcome is possible, but not the most immediate. Finally, we have our bear case, and this one has a 35% probability. Why so high for a bear case? Because those existing headwinds, like the China export restrictions and the major foundry customer problems, persist or even worsen. On top of that, the NVIDIA partnership's benefits are delayed or just don't have the immediate impact everyone hopes for. A broader economic slowdown could also dampen R&D spending. In this scenario, we're looking at significantly slowed EPS growth of just 3% and a reduced PE of 28x, reflecting increased uncertainty. That brings our fair value down to $368.20 per share. I'm giving this a higher probability than the bull case right now because the technical chart is showing a bear flag pattern, which often precedes more downside. If it breaks below our $415 support, this bear case becomes much more likely, with the 370 level potentially coming into play. All right, let's pull up the chart for SNPS. Here's what I'm seeing. Synopsys has been in a bear flag pattern for weeks now. For this stock to really resume its strong uptrend, it absolutely needs to maintain above the 455 level. That's a key resistance point. Below current levels, we've got critical supports at 415 and, further down, at 370. The bear flag is a strong signal of potential further consolidation or even a move lower if it can't break that 455 resistance. So, is the bottom in for SNPS? Based on our analysis, I'd have to say, not definitively. While the long-term fundamental story with NVIDIA and ANSYS is incredibly compelling, the near-term headwinds and the current technical bear flag pattern suggest we might not have seen the absolute low just yet. We're in a consolidation phase. The most probable outcome is the base case around $441, but the bear case has a significant probability of 35% if those headwinds persist and the technicals play out to the downside. However, for those with a long-term horizon, this could present an incredible opportunity if it dips into the bear case territory. Given our scenarios and technical analysis, I'd be looking at potential buy levels around the 415 support mark, which also aligns reasonably well with our base case fair value. If we see a deeper dip into our bear case territory, the 370 support level could be a very attractive entry point for long-term investors, assuming the fundamental thesis remains intact. That's it for our deep dive into Synopsys. What do you think? Is the bottom in? Let me know in the comments below. And if you found this analysis helpful, smash that like button, subscribe to the channel, and hit the notification bell so you don't miss our next episode. Stay safe out there, and I'll catch you next time. Remember, this is not financial advice. I'm just an internet personality sharing my analysis for educational purposes. Investing in the stock market involves risk, and you could lose money. Always do your own due diligence and consult with a qualified financial advisor before making any investment decisions. I may or may not hold positions in the securities mentioned.